everybody, welcome to Looking at the Markets with David Modell. Today was Market Insanity. I've got a bunch of charts to show you and possibly some actionable ideas for your investing outlook. And I just want to let you know, if you would like some help putting together an investing or trading plan, because you really want to have a plan, otherwise you really don't know where you're going or what you're doing, you can contact me by email at davidmodell@gmail.com. Also, I've got a bunch of free financial reports in the description below this video. Click on those links, check them out. Today was quite a day. S&P 500 down almost 2% after yesterday being up. It was a big up day. The market likes what Jerome Powell, the Fed chair, had to say, and yet now it's realizing, oh, wait a minute. Yeah, he's not going to be raising interest rates anytime soon, but he also mentioned that the economic outlook is slow. It's not good. So, in other words, yeah, we're kind of waking up with a hangover today from yesterday's euphoria. And justifiably so, in my opinion. If you think the S&P did poorly, the NASDAQ down 2.5%, the Russell, the small caps, down 3.62%, just getting crushed today. Crude oil down, gold up, silver flat. Interesting. I'm bullish on both of those, though. Let's take a look at the 10-year bond. Just got crushed today, down to 2.455%. For anybody who's thinking about investing in bonds, what are you going to get? I mean, once you take out inflation, you know, you factor in it, because inflation reduces the value of your investment. And so 2.455% yield per year after inflation, you're not even getting much of anything at all. The VIX, the volatility index, up 21% almost in one day. And let's take a look at Bitcoin versus the US dollar, almost exactly at 4,000 right now. It's really holding the line at 4,000, which I think could be a good sign. It's been basing for a while now. Hopefully it won't take another leg lower like it did from the $6,000 level to the $3,100 level. Hopefully this will not just be another leg down, and perhaps this could be exactly what we need in the Bitcoin space right now. Let's take a look at some news items. I've got a bunch of mind-blowing charts coming ahead, so hang on here. All right, the U.S. budget deficit hit a record $234 billion. Not looking good. Let's look at some charts for that one. There's the chart, and there it is. Look how far down we are. It hasn't been this bad for years, since the recession era. Really, oh my goodness, not good at all. Let's break it down. For the first 4 months of this fiscal year, interest payments, just the interest payments, not even the debt. The interest payments on the U.S. national debt hit $221 billion. That's $19 billion, or 9% more than in the same period last year. The interest on the U.S. public debt is on track to reach a record $591 billion, almost $600 billion this fiscal year, more than the entire budget deficit of the fiscal year 2014 or 2015. And it equates to almost 3% of the estimated gross domestic product, the highest percentage since 2011. We are swimming in debt. Just the interest payments are horrendous. This is where your tax dollars are going, by the way, in case you're wondering. Let's take a look at let's see what this all looks like. Here's another look at the U.S. Federal budget deficit, 12-month total in billions, way up here. Not looking good. Let's look at the interest payments alone. Federal government expenditures in terms of interest payments in billions, up and away. This is a multi-decade chart going all the way back to the beginning of 1990, and it's just going up and up and up. We're paying billions of dollars just in interest payments. Not good, not good, not good. All right, let's see what else is going on. Is there anything happy in this news? Maybe at the end, but this part isn't so happy. The 3-month versus the 10-year Treasury note yield curve has inverted for the first time since 2007, right before the Great Recession. This is a major recessionary indicator. When yield curves invert, like this one has done for the first time since right before the recession, that oftentimes, in fact, pretty consistently indicates that a recession's coming. Let's take a look. Here's the U.S. 10 yield, and down, okay? As we saw before, this one says 2.49, But let's see what the latest reading on it is. I think it was 2.455 if my memory is correct. There it is, 2.455. So it's even worse than what we're seeing on the chart. All right, it's actually lower than this. It's below that line. Here's the spread we just talked about, the 3-month versus the 10-year. The curve has inverted, and there it is. It's below 0. It's not even a flattening anymore. It is decisively, it broke below it. That is a definite recessionary indicator. First time since 2007. And here's a chart showing what happens when these kinds of yield curves invert, when they go below the 0 level. So the blue line is the 3-month 10-year yield versus the 3-month versus the 10-year, which we were just talking about. We can see, so this isn't even totally accurate. It's actually below this. All right, it's decisively below that 0 line now. Today, this chart's a little bit old, but it shows what happens every single time it goes below that line. Recession happened. It happened before the 1990 recession. Happened before the 2001 dot-com bubble bust recession, and right before, as we said, in 2007, right before the Great Recession of 2008-2009. The 2-year versus the 10-year, according to this chart, same thing. Every time it dips below that line there, that 0 line, it's called not a flattening but an inversion. Happens right before recessions. Here's the 2 and the 10. Again, this is a little bit old, shows it approaching it, but again, every time it dips below the line, the gray bars represent recessions, dips below, right afterwards recession, dips below, recession, dips below, recession, recession, recession. This is actually going back to the 70s, 1970s, early 80s, and so on. So this one takes it back even further, and look how consistent it is, and we're there now. So, is there any happy news, any good news? Well, this is all good news if you are into gold, silver, that kind of thing. I'll show you a couple of good news, bad news types of things. Russia added another 1 million ounces, or 31.1 tons, to their gold reserves in February, according to the latest data that they've released. Russia's gold reserves, now over 2,000 tons, the 5th largest gold reserves in the world. The Central Bank of Russia buys all of Russian domestic gold production, and Russia is viewing gold bullion as a, quote, 100% guarantee from legal and political risks. I don't necessarily believe in 100% guarantees of anything in this world, but I do believe that precious metals are a pretty good shield against these types of legal and political risks, as they say. Let's take a look at what that looks like in the chart here. Look at that huge gold buying here. This is the month-on-month change. They added 1 million ounces, as we just discussed, and it's just huge. Up to, looks like the 70 million troy ounces range there. Okay, big bar here as well in terms of gold buying in the 1 million ounce range here. Okay. So that's gold. Let's talk about silver. There was a major drop in U.S. silver production in 2018 compared to the previous years. So if you're into silver, this could be, bad news for the silver community, or good news if you're an investor, possibly, because if you're an investor, you might actually look forward to shortages, because that could certainly increase the price of gold versus the U.S. dollar. And other currencies. U.S. domestic annual silver production going all the way back to 2000 up to 2018, the latest data. And here it is. This is it. It's down. U.S. silver production is down pretty consistently. You can draw a trend line here if you wanted to in your mind, okay? Look how, we're talking way, way, way below, less than half of what it was in the year 2000 at the turn of the century, the turn of the millennium. 63.7 million ounces U.S. silver production down to less than 30. That's less than half of that. Way, way, way down. Again, not necessarily great, or it could be great if you're an investor in that sort of thing, if you're thinking about accumulating silver. You can get the physical, or you can, you might consider mining stocks as well. That's can be a great way, if you choose carefully, to get some magnification or leverage on your silver industry investments, and gold as well. You can approach gold buying. Why is Russia buying so much gold? Do they know something we don't? China buying a lot of gold, other countries buying a lot of gold, central banks. Why? What do they know that maybe we don't? Do they see something coming? Socio-political, economic turbulence coming? Possibly, and this could be a crisis hedge as well as silver. My name's David Modell, and I've brought you the facts today. Am I trying to scare you? Not really, but I'm trying to keep you alerted. If you like this video, if you want me to keep bringing these kinds of reports to you, then please give me a thumbs up on YouTube on the video, and subscribe to my channel if you haven't done that already. Hit that notification bell so you can get alerted whenever I put out new updates and videos like this one, and leave a comment. What are you investing in right now in the comments section below the video? And speaking of the below the video, if you want to contact me, I'll put my email address there, davidmodell@gmail.com, if you're interested in coaching for your trading or investing. And I also have some free reports, financial reports you can download below this video in the text description as well. Thank you so much. I appreciate it. I'll talk to you again soon.